Hello, friends. I'm Winnie Sun, longtime financial advisor and co-founder of Sun Group Wealth Partners, where we help individuals, families, and companies across the globe with their comprehensive wealth management. Have you heard of the gift that keeps on giving? Perhaps you've considered gifting a loved one money or stock, but have wondered how to best do this and what you need to know. You want to make sure you do it right? Well, good news, you're in the right place. Today, we're going to be talking about what you need to know to gift money or stock effectively. We're going to go over tax considerations, the transfer process, and other things to keep in mind. After all, you want to make sure that your gifts bring joy today and for the future. Have you wondered, how do I gift money or stock to someone? Well, the act of giving money is pretty simple, right? Just pull out your wallet and hand it over and put it into a greeting card. Well, yes, to gift money, you can simply write a check or transfer funds directly to the recipient's bank account. You could even put that into an investment account. Now, if you're gifting to a child, you can even consider making a contribution towards their college savings. Now, when it comes to gifting stock, though, this is going to be a little different. First, you'll need to have the stock that you want to gift in a brokerage account. Then, you can ask the recipient for their brokerage account information and request a financial advisor or institution to assist in the transfer of the shares to the recipient's brokerage account, or even transfer the stock certificate to the recipient. Now, in this situation, you likely won't be able to surprise the receiver because you'll need to ask for the recipient's account information. And remember to always check with your own advisor or a financial institution for any specific instructions and fees that might be involved. Now, what is the tax implications of gifting money or stock? Here in the United States for this year, 2023, you can gift up to $17,000 per person per year without incurring a gift tax. Well, what if you want to give more than that? Well, then you should consult with your tax accountant or CPA because you'll need to file a gift tax return. But you probably won't owe any taxes unless your lifetime gifts have exceeded the lifetime exclusion amount, which for 2023 is $12.92 million. That's right, it's a really big amount. Now, it's important to know that if you give stock, the recipient of your gift will take over the cost basis, which is the original value of the stock for tax purposes. Can I give money or stock to someone overseas? Why, yes, you can. You can give money or stock to someone overseas. However, you'll need to consider the currency exchange rate and any foreign transfer fees involved. For gifting stock, make sure to check with your financial advisor or institution for any restrictions or requirements for international transfers. Is there a limit to the amount I can gift to someone tax-free? In the United States, you can gift up to $17,000 per person per year without incurring gift tax in 2023. If you're married, you and your spouse can each gift up to $17,000 per person, so you can gift up to $34,000 per person per year as a couple. It's important to also remember that you actually don't have to be related to give a gift to receive a gift. You can really gift a gift of $17,000 to anybody. It could even be the mailman. What are the legal requirements for gifting money or stock? The legal requirements for gifting money or stock really depends on which state you reside in. Here in the United States, there's no legal requirement to have a written agreement or document for gifting money or stock, but it's always a good idea to keep records of the gift for your own protection. Now, for cash gifts, I suggest writing a check with 2023 gift clearly written in the memo of the check. Make a copy and send this to your accountant to keep a record of. Now, when it comes to gifting stock, though, you want to make sure you follow the instructions as your financial advisor gives you to transfer the stock correctly. This is something that we help our clients with, especially for those special occasions like birthdays, holidays, or even wealth transfer strategies that we do a lot at the end of the year. How do I transfer stock to someone as a gift? To transfer stock to someone as a gift, you need to have the stock in a brokerage or advisory investment account. You can then call us as your financial advisor to transfer the shares to the recipient's brokerage account or advisory account, or even request to transfer the stock certificate to a recipient. Can I give stocks with restrictions or conditions? Yes, you can give stocks with restrictions or conditions, but it's important to have a written agreement or document specifying the terms of your gift. This is an area where you definitely don't want to do this alone. Consult an estate or tax attorney and make sure that you understand the implications of gifting stocks with restrictions or other conditions. What is the best way to document a gift of money or stock? Keeping records of gifting is really smart. You want to keep a copy of the gift that you've made and keep this securely recorded. The best way to document a gift of money or stock is to have a simple written agreement or document that states the terms of your gift. You want to include the date, the amount or number of shares that you're giving, the amount gifted, and the name of the recipient. You can also include a letter explaining the reason for the gift and your relationship with the recipient. Then keep a copy of this agreement or document for your records, scan it, and add it to your encrypted financial first aid kit. What's a financial first aid kit, you ask? Don't worry, I've got you. Check the link below for the next video. Can I give stocks to charity? Yes, you can. In fact, many people every year give stocks to charity. By gifting appreciated stocks, you can potentially receive a tax deduction for the fair market value of the stocks and avoid paying capital gains tax on the appreciated value. This is something you definitely want to speak to your accountant and financial advisor about before you gift. Reach out and check with the charity and us, your financial advisor, for specific instructions and requirements for gifting. And keep a record of your gift and submit this to your accountant. You've probably wondered what happens to the gifted stock that you've owned that you've given to someone else. What happens to the cost basis and who pays the tax? Well, the cost basis of gifted stocks is transferred from the giver to the recipient. The recipient receives your gift, receives the stock, and takes over the cost basis, which is the original value of the stock, which is aka the purchase price for tax purposes. Then, when the recipient sells the stock, they'll be the ones paying any capital gains tax. The capital gains tax is based on the difference between the cost basis and the sale price of the stock. You've heard me say this before, it's important to keep clear records of your gift. This includes the date and the cost basis of the stock so the recipient can accurately report the sale on their own tax return. If the stock has appreciated in value, the recipient may owe capital gains tax. This is also an opportunity to discuss tax loss harvesting with us, your financial advisor. You may be able to use any capital losses from other investments to offset the gains to help minimize taxes. I hope you found this information helpful, and I want to thank you for watching. If you would like to learn more about how we can help you with your estate planning and overall financial planning, please reach out. And please take a moment to like and subscribe so that you'll be the first to know when we post our next video. Thank you and be well.